Welcome back. Well, as promised, let's get a conversation going with Metropolis. Remember, COVID cases in India are on the rise once again, with around 10,000 active cases, as per the Health Ministry data. The centre has asked states to ensure preparedness for the management of the virus, where states have been also directed to focus on testing with RT-PCR tests as well. To understand whether there has been a pickup in testing so far, we'll be joined by Ameera Shah, Promoter and Managing Director at Metropolis. Hi, Meera. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, let's straight away understand the trends in COVID testing. Have you seen an uptick? And will revenues coming in from COVID testing be higher than what we saw in the previous quarter? It was only around 8 crores odd. I'm hoping not, but you give us an update.
No, so while we are hearing obviously about COVID increasing, frankly, I think consumer behavior last year changed, where people actually started using far more rapid kits rather than doing PCR. One is the fear of any government reaction if they do a PCR test, which is not true anymore. But of course, second is people just want to do a rapid test at home. So we are not actually seeing PCR cases increasing across the industry at this point of time. I think also there's one other consumer change, which is that I think people got so tired of testing and all of that, during COVID, that I think people are just living with their diseases now, which is a bit scary. You see, most people we know have got some sort of a cough, cold, fever, and that cough continues for 2 weeks, 3 weeks at a stretch, and most people don't go to a doctor or don't go and actually get themselves tested. This is confounded by the fact we also have H3N2 in the system. We also have COVID on the rise. There's also viral fevers and then obviously bacterial infections. And the symptoms for most are the same. And that's why it's important for people to understand actually what is causing them the challenge, so they're able to treat it accordingly.
Okay. In fact, Ameera, good morning. I can tell you from personal experience, I just recovered from COVID last week, and it was a similar case. I mean, I tested at home, it tested positive. I didn't feel the need to get an RT-PCR because by the time I thought of that, my symptoms had already subsided. So I take your point. Maybe the strain itself is weaker. We can hope for that. But can you give us some numbers, for COVID testing itself, just testing in general? How has it been so far this quarter? In terms of growth, and what is the expectation as we go into FY24 for the company itself? What kind of realistic growth are you looking at?
So honestly, COVID testing this quarter is not going to look anything different than most quarters. I think it's a marginally increased, so really nothing to talk about. I think we won't see COVID revenues really play any sort of an important role in the revenues for the diagnostics industry. It'll be as it is every quarter, one of the many tests. I think in terms of the industry, I think the last year there was a lot of negative perception around new competition coming in, a lot of so-called disruption happening, pricing pressure, and a lot of worry around, how this is going to play out into the future. And actually what we are seeing on the ground is slightly more nuanced than what the general perception is. On the illness side, which is the area that Metropolis really operates in the acute illness side, where people get really sick and need advanced diagnostics, we actually have not seen a change in either volume or a change in consumer behavior or a pricing pressure in any significant way. It is on the wellness side, which is a new category getting created during COVID, where you've seen a bunch of the new health tech companies that have come in really playing with price as a way to enter the market, and instead of sort of quality and service being at the center of it. So I think on the wellness side, there is certainly pricing competition, but on the illness side, we continue to see quality and service actually be the most important thing, because we have to understand doctors are very dependent on accurate diagnostics to make their decision on treatment.
So on just one follow-up here, on the illness side, have you seen any pricing pressure at all? Has it affected your profitability in any way? And also trying to understand whether you will be taking up the rates in specialized testing in the quarters to come.
Actually, if you see for the whole industry, the pricing pressure has not been there on the illness side. Again, it depends on which part of the industry you play in. If you are a chronic player, where you're mostly been doing, diabetes testing, cardiac testing, you are seeing some impact on pricing pressure. If you're an acute player like us, we are not really seeing the pricing pressure from a MRP or a customer price basis. I think where there is a certain amount of pricing pressure is more in the margins for the intermediaries in the industry, which is where the competition has actually heated up. Your franchise centers, the discounts that have to go to hospitals when you're doing a B2B kind of business. So I think that intermediate margin is where you're seeing a little bit more of the pricing pressure, but that also is more, linked to the semi-specialized tests, which are about 20, 30, 40 in nature, which tend to be more competitive, and new entrants are trying to play on price in those particular tests. We are not seeing margins impacted by pricing pressure or by competition. If you see pre-COVID, we were at about 26 to 27% margin, EBITDA margin. We are currently at 25.5. The difference of 1.5% is actually not because of pricing pressure, but because we have gone on a large lab expansion spree and added almost 40 labs in the last 2 years, obviously, which will dilute the margin in the short term as they grow to maturity and then start becoming profitable.
Ameera, hi, good morning. The stock price was almost 3,600 rupees in December of 21, and now at about 1,200. Now, of course, when you run the business, not the market, and of course, markets in their own ways, overpricing and then underpricing things. But if you had to send out a message to investors watching this program, what would it be? Would margins be around this 25% level where they were in the third quarter of 23? Is there scope for improvement? What should we watch out for?
Actually, markets, as you know, tend to move as a pendulum. So, at the peak price of 3,400, it was on the peak of COVID, where COVID revenues were pumping in, profits were coming in, and obviously all other industries were not doing well. So a lot of money came into diagnostics because it was considered sort of the sunrise time at that point, which honestly I think was non-sustainable prices because we all knew it was one-off based on COVID. I think post-COVID has gone. Obviously, the COVID revenues and profits have eroded for the whole industry. And we've all waited for non-COVID to come back to normalcy, which it has. But still, consumer behavior hasn't come back to complete normalcy as it was pre-COVID. So it's a matter of a transition. And I think we are now in that transition. The message to investors really is to look at sort of the business pre-COVID. And you saw that we were all growing, the industry, the top players were growing at maybe mid-teens growth with a similar kind of a profitability. And we are actually at the same place today. So rather than having sentiment driving it only in terms of going up because of COVID and then drastically falling because COVID has come down, I think if we look at the fundamentals of the business, they're as strong as they were in pre-COVID.
All right, Ameera, very quickly before we let you go, any further inorganic growth are you looking at? Point number one. And point number two, wellness and specialized testing. I think that's around 13% of your mix in the coming year. What is that number headed to?
So wellness, you're right, is about 13%. That will grow by a few percentage points this next year. Our specialty mix is almost about 42%, which is probably the highest in the industry, which is what is related to the acute testing that we do. And that will also keep moving up. And this is how we keep moving up the value chain and very different from everybody else. As far as the question around inorganic, I think there is a divorced reality between the public markets and the private markets still. I think private players will not come to some reality on the valuation. So I don't see very likely too many deals happening this year unless we see private markets adjust to the new realities of the public.
Of the public market. All right. Thanks very much, Ameera. Great to have you with us here, and I hope we speak more often. This is an interaction after some time. Thanks very much for your time. Good luck. Good speaking with you. Well, 66 points on the Nifty, which means that the market's come up a little bit, 20, 30 points, basically back to where we opened, the opening levels. Vikash Kumar Jain is with us. He's investment analyst at CLSA. Vikash, great to have you with us here. Thank you very much for your time. I just want to start by talking to you about the Kirit Parikh panel recommendations, and we're on the cusp of the end of the financial year. An approval has to come, but will it come is the question. Do you see any reason why it should not, Vikash, and how important is this for the sector?
Sure. Hi, thanks for having me. I would say that that is a recommendation which is where the whole process, all the key ministries like the oil ministry was involved in the whole suggestive process itself. And I think it will be rather odd for them to not then go ahead and complete the whole process and implement it. So I would say that it should most likely play out in that manner, that, the final approval should come in from the cabinet. It is something which should be more important for the consuming part of the sectors. That is, the consuming companies, city gas companies per se. In addition, even for the upstream companies, I would say that it just brings in a higher predictability. So essentially, if you were to look at the gas price, the floor price, which has been approved by the formula, that is $4 per MMBTU, across the life of upstream companies, they have not realized the gas price above $4 per MMBTU for more than just 4 quarters. Only in 4 quarters, 2 of the last quarters, and there was 2 quarters earlier in 2015-16 when they had realized the price of more than $4 per MMBTU. So our opinion has been that it will be a kind of a win-win formula, where, of course, the gas consumers are the obvious beneficiaries, but even the upstream companies actually benefit out of it.
Okay. In fact, Vikas, in your report, you write that you've raised IGL's EPS by 6 to 15%, and it's a very rare combination of double-digit volume growth as well as pricing power. So is it just for IGL, any other companies in your universe that you would raise your earnings estimate for, and what kind of price targets are we looking at?
I mean, so let's not get very stock specific, but clearly within the city gas space, as our report points out, there are a couple of names that we like more than the others. So let's just keep it there.
Okay.
Because just turning attention to the markets then, the short while, a few weeks ago when we spoke, you said we're not in extremely bearish territory. But from there on, the breadth of the market just worsened. We have stocks that are falling off the cliff. Are we almost there now in terms of forming a bottom and heading into peak bearish zone? Or do you believe we still have more to go?
No, I think, Nigel, that's a lot has changed since we last spoke. Yeah. So SVB, a lot has happened. In fact, I was just looking through certain interesting points that unless there is some magic that we are able to get in the remaining part of the session today and on Friday, this will be the 4th month where Nifty is going to close negative on the trot. Now, I just did a little bit of a basic digging. Over the last 25 years, this will be the 3rd time that Nifty has given negative returns for 4 months on the trot. It has never given negative return for 5 months on the trot. I mean, so just to there's always a first time, but just to give you a sense of how rare this continuous negativity has been. Overall, valuations have become a bit more palatable. And that is something that we should also kind of bear in mind, that, and more importantly, our proprietary India Bull Bear Index that we use to track sentiment and to quantify sentiment is hit an extreme bearish zone. That is, it was almost over 90% bearish on the Monday when we made a fresh low on Nifty. That is about a little over 1.5 weeks back. Historically, that indicator has worked very well as a buying zone, other than periods when we've had free fall kind of declines. That is, other than 2008 and 2020, it has worked very well. I would say that from a narrative basis, over the last 3-4 weeks, we have globally changed into a narrative where we are now expecting almost 100 bips cut in Fed fund rate before this calendar year ends. I think that in a way is implicit that market is expecting a very significant recession to come in very soon. The first rate cut is, I think, penciled in sometime around July or so. So if that is really the case, then sometime in the next 3-4 months, market expects something big to happen. Although the events that have played out are negative, we don't believe that things will play out on an immediate basis. So there could definitely be at least a tactical up move that we see. So recently in our focus portfolio, which is, by the way, done pretty well, it's kept its track record. This will possibly be the 9th quarter when it outperforms the Nifty. We've had it only for 9 quarters, so almost an unblemished track record. We've added beta in that portfolio just a few days back. So that's how we want to play this tactical trade. At least from here on, we should see some kind of a relief rally at the minimum.
Okay, well, that relief rally is long in the coming. It's not come yet. Vikash, you said that there'll be the fourth instance, only the third time this has happened. And if this is a rare occurrence, but the occurrence is occurring, what is the longest that we've gone down for? I mean, in the last three instances, did you look at it?
Last three
How many
instances?
months?
No. So what I was mentioning was 4 months on the trot negative returns.
Yeah.
This
No,
will
I
be
got
the-
that. Yeah.
So
No, I'm saying...
absolute,
absolute.
absolute downside have historically at times been much bigger. So that's the interesting bit, that this doesn't look like a dramatic decline at the benchmark. It looks more elongated pain. Despite falling for 4 months, we are down only about 9, 10, 11%. I think that from that absolute perspective, it looks like the market has digested a lot of bad news.
Okay, that's the second person telling us, right, that the market has digested a lot of bad news. I think Venugopal Gare was the other
But
one.
I think the market has got a big appetite. Keeps on digesting.
And that's the first time we're going to see four negative
Unless
months in
something
20
breaks
years.
in a big way, we should not have a waterfall decline. If we've not had a waterfall decline, our proprietary bull bear indicator has worked 9 out of 10 times in the last 15 years.
All right, Vikas, the last time you joined us, you said we're not yet there. Now you're indicating maybe we're almost there in terms of peak bearish zone, and maybe a bit of a relief rally could be on the cards. Always good hearing your thoughts, Vikas. Thanks so much for stopping by and filling us in with your take on various sectors as well as the markets on the whole. For the time being, we'll slip into a short break. Mitesh Thakur is waiting for us on the other side. The market's holding up in the green. What's the outlook from here on?
Welcome back to Corporate Trader. Let's get a quick call on what's happening in the market itself. There is a bit of a pickup in the pace, not so much, but still holding up in the green at the high point of trade. As you can see, 60 points higher now. Mitesh Thakur joins in. Mitesh, the bulls are so used to, lackluster markets that they'll take anything with both hands. And today is looking like a good day, 60 points higher. Do you think we can build on to these gains, or do you see volatility creep in towards the second half, given that it's expiry? And what are the stocks to look at now?
So the initial feeling is that good chance of volatility kicking in purely because one, it's expiry. Two, I think the markets are still ranged. I think they are not giving any kind of a significant directional bias. So what is happening is that one day you're up and the next you're down. So basically it's still 16,800, 850 on the lower side to roughly about 17,150 on the upper side. So I think we must believe that next few days, and given the fact that most of the volatility indicators are turning flat, that the next few days will be possibly spent in more of a sideways kind of move. On the stock side, I have a buy on Power Grid. Keep a stop below levels of around 220 here and look for targets of roughly around 230. And Ramco Cement is making a fresh swing high. Last 1.5 months, the stock has not been able to give a closing about 745, 746 levels, and today it's trading above that, and the indicator setup is positive. So assuming that there will be a breakout at the end of the day, keep a stop below day's low of 740. Look for targets of 775.
Okay, all right. Thanks a lot for that, Mitesh. Let's hop across to Manisha Gupta. She's standing by to give us a quick insight into commodity markets. Hi, Manisha. Morning.
Morning, Nigel. Thank you for that. Well, I'm looking at the copper prices, which are off their 3-week highs, and we haven't been able to cross above that 790 mark on the MCX either. The reason that you have seen this sharp decline come in for copper is because the funds really seem to be dumping their long positions as of now. So I was looking at the data in the markets, and as per that, this is the first time in 5 months that we have net shorts being building up in case of copper contracts there on LME and in Shanghai as well. And I'll show you that via data as well. And this comes in from CFTC, by the way. So in month of January, the long contracts were at 78,000, which currently stand at 37,000. So nearly half of the kind of longs that we were holding in Jan. Jan was a great month because the markets were opening up. China was opening up as well. And the markets did believe that we would be looking at very strong demand from China especially. And this is the shorts really. In January, they were as low as 6,000. Right now standing at 40,000. So 6 times of an increase in shorts here. So net longs have declined and the shorts have increased by a big margin. So when you look at the open interest itself, that is strongly bending towards further decline in case of the copper prices there. And this is happening even as we have been telling you that the Peru mining exports are down by 20% for the month of Jan. That's on a year-on-year basis. There are concerns on supply and mining there. You also have been looking at lower inventories into the market. There's a Goldman Sachs report which says that the clean energy demand for copper for 2023 itself is estimated 30% higher on an year-on-year basis here. Also, Goldman Sachs says that the global inventories will fall to all-time lows of 125,000 tons by the end of second quarter. That is by the end of September itself. Take a look at the inventories to begin with. So whether it is about INE, LME or Shanghai, we are looking at inventories much on the lower side. Shanghai stocks have declined by 91,000 just in the month of March here. And when you look at the LME stocks, they are trading at just about 41,000. This is the lowest in that we have seen in 16 years, by the way, for the copper LME stocks there. The outlook or the forward-looking statements coming in from Trafigura are quite on the stronger side. They're expecting $12,000 per ton of copper prices in this year itself. Goldman Sachs has been talking about 15,000 by 2025. Well, just to tell you that right now, copper prices are trading at $9,000. All-time high has been at 10,845. So we are far away from there. And as you can see, the money manager investment funds do not believe that the copper prices are going much higher. But that's not the case from banks and brokerages, which continue to be very bullish in sense of copper.
Okay, thanks a lot for that. So copper at an all-time high. Let's move on now and talk about some of the other stocks in focus this morning. Quest Corp is on our radar. Nimesh is here to give us the latest on that. Nimesh, over to you.
Hi, Sona. So there was a large block of 4.5% equity changing hands. And I believe the promoter entity, which is Fairfax, they've bought this 4.5% via reverse book building from the open market today and at a premium. So that's the reason why that stock is buzzing in trade. So with today's acquisition of 4.5%, Fairfax holding in Quest Corp goes up to 34.6%, and the overall promoter holding will now go up to 54.5%. As of December, the holding was close to 51%. Now, as far as Quest Corp is concerned, there are two promoter entities. Ajit Isaac owns 22%, close to 22%, and Fairfax is holding 30-odd%. Now, with this 4.5%, Fairfax holding will go up to close to 34-35%. The institutional holding is quite high as well in Quest Corp. And I believe some of the large marquee funds as today in the reverse book building participated and sold the stake to the promoter entity, which is Fairfax. So that's a big news that Fairfax at these levels at a premium has today bought 4.5% via reverse book building from institutional holders. So we've written to the management for an official word, but I haven't access to the book of reverse book building, and that suggests that Fairfax has bought today 4.5% and has increased the stake in Quest Corp.
All right, Nimesh, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Ajay Sahai and Dr. A. Saktivel of the Federation of Indian Export Organizations to talk about the way exports are shaping up for the country. Stay tuned.